Hey, good morning, Bob. Trade Genius. It's been a little over a week. Been traveling and getting back and trying to get back in the saddle here again. And wish everybody happy Easter for those who celebrate it. And I'm going to go through some charts here. And next week's going to be a very interesting week. And I'll address it when I get to those different charts. So, first of all, with gold, it's definitely overbought now. And if you're in it, I'd set a stop around 120, 140. I'm expecting gold to pull back this week. GDX, the miners, this is the reason why the miners at the end here start to roll over. If you're in GDX and you want to stay in it, 124, $24 would probably be my stop. For Nugget, same. And if you're in it, 1050 would be a good place to set a stop. The VIX didn't really do much on Friday, although the market was kind of funky. It come down and they pushed up. I think a lot of this is war talk, and they took advantage of it to move the options around a little bit. But the VIX didn't move too much, and if we don't have war by time the ES opens on Sunday night or some sort of provocation, I'm expecting the markets to settle into a regular OPEX week, and then we just have to take things a week at a time. Silver, same, and they've pushed up its way. These are VWAP bands. This is a percentage away from about the average price over the last 100 trading days. And so we're way above. And so when you get this far above, you're running out of, you're running ahead of your artillery. And so it usually pulls back usually to the VWAP. But if you're in it, you want to stay in it, 1730 would be probably a good place to stop. Corn, which I am in, it's finally pushed over its 100-day moving average here. And so I'm holding. And hopefully I'll be able to get a sustained move here. It actually peaked. Well, looks like just like a double top here. So we'll have to see if this is going to be a cup or if it's going to fall back again. But my stop is now 1910 for corn, and I'll note that on the spreadsheet. This is why I don't think the market was in some sort of liquidation mode on Friday. XBI was up, and just really odd to me. And the way I look at the market is that if market's down and biotech is up, then it's just kind of a rotation game that they're playing and not really a liquidation. And so for me, what I look at is if market down, oil down, biotech down, then people are running for the hills. And that wasn't the case. Oil was flat, biotech was up, SPY was down. So it just tells me that it's probably some sort of, they took advantage of news here. Because, the SPY was pushing up positive until Trump dropped that bomb. And then all the tweets around the North Korea thing, I think they used that to push the market around a little bit. But so we closed BIS at the open, not for no other reason than going into OPEX week's usually a positive week, and I just wanted to get out of some of these double shorts that were in. And it was a good thing on BIS because it just dropped from the open, and so we got out. Now XBI is sitting at VWAP, but it's over its 100-day moving average. And so we'll just have to see where it goes from there. It just could bounce around here for a bit. And so if it climbs up, it'll probably push. And if it goes back underneath the 100, then we'll see further weakness. Oil, we're going into seasonal weakness for oil. End of April through July is weak for oil. I think this whole move here was big money trying to get themselves out. And so we're way above VWAP. So we're way away from support, which would be here for oil. And, this is, 50-cent move on 60. So we're looking at 8% to come back down to VWAP. VWAP's been kind of flattish. And that corresponds to where my head is. I think oil will go back down to the high 40s. And I think we saw the high on Wednesday. And so just keep an eye on that. If you're in oil, at least OIL, jump out at 580. We got out of AG this week and had a nice little push here beyond it. But if you're still in it, then I would look at 890 to hop off. I'm looking for this thing to come back down to VWAP and we'll buy it again. SLW, we're not at SLW. It's been really jumpy moves here. I didn't chase this move. They sold it back down to VWAP. They pushed it up again, sold it back down to VWAP again. But it's definitely constructive. And so if you're in SLW, probably 21.15 is your stop. But if you're not in it, then I would wait for it to come back down. It seems to want to keep coming back down and testing support and then running away from it, and then we'll close it. But I think SLW is on its way back. SLJ, the same thing. If you're in SLJ, your stop would be around about 13.30. If not, I'd wait for it to see if it gets support here or support here. Drip, we got it a drip. I got stopped out, at least what I shared with people, and then it took off from there. And I think from now on with these doubles, stops aren't working. They're finding them and then they're reversing them. So we're just going to have to scale in and scale out. And that's my recommendation to anybody following me or subscribing to me. We're going to just go ahead and put multiple buys on. And if we get our sell target at a half a position, so be it. But these stops are crazy. I mean, it did a $2 move from the stop hit. So we're going to be just layering in buy orders, and we've been doing that with XIV pretty successfully. We did it last time with AG, and we got stopped out for profit before we could buy again, and same with TWM. So I'm just going to make it a normal course of the way I trade from now on. XIV, we have a swing on right now. We caught our second buy here towards the end of the day. So we're in an average in the high 63s. And so now we're just sit back and waiting. This is way oversold. And in fact, there's a lot of chatter this weekend that the VIX is outside of its upper Bollinger Band for 4 days. And that usually signals a reversal. And when you see where we are with UVXY, it's just, for whatever reason, there's panic in the volatility zone. And so now, having said that, probabilities are just probabilities. We've had suppressed volatility for so long, and it could push through. I mean, I put my money where my mouth is. I bought UVXY puts on Friday for next Friday, and I'll roll those to the following Friday. Because once it rolls over, UVXY will probably get cut in half from wherever it peaks. So, but XIV, the swing trade's on, and my target is VWAP. So, but right now I have a target set at 67. So, yeah, I'll change that if I need to. IYR, it's just interesting. It's way overbought. It's definitely a interest rate trade. So it's a proxy for the 10-year. As the 10-year falls, the yields, IYR is going up. Real estate's kind of a weird mix this time because I think we're gonna see a lot of stress in terms of occupancy, But right now, people are running to it because the relative yield against the Treasury market. So just hot money moving in and out of IYR right now, I think. And so I'm just kind of staying away from it. It's way overbought right now. It'll probably come down to 78. But this is the one we'll want to be short when we go into a recession, because this will go from 79 to about 25 or 30. Gold we talked about. So here's the yen. So this is one of the things too. Yen's pushing up there pretty hard too. I had a 90 target on this. I don't think the Japanese are going to let the yen get a disorderly strengthening, because that would just cause a lot of panic in all the markets. And they've shown that they have a willingness and an ability to do this. So I would expect before too long we'll see a reversal in the yen, which will mean a reversal in the miners and metals, which will mean a reversal in the markets. So we're seeing money flow rolling over here. So we're just going to see momentum already started coming out of this. And so when you start seeing this divergence to this divergence, I think price is going to give way. So just FYI. Okay, this is the discretionary, the Amazon chart, and it's just falling now. So there's no discretionary income. I don't get it. PPI, we had a negative PPI. We lost 60,000 retail jobs. We have 19 retail bankruptcies, and nobody has any cash. And if they keep jamming rents and they keep jamming healthcare, they're literally going to destroy the rest of the economy. And why you don't hear screaming from other sectors of the market because of this is beyond me, literally beyond me. And we're a 70% service economy, and so when you see that starting to break, that means commercial real estate's in trouble. That's marginal income for a lot of people, and it's also it's going to affect the banks, and so you're going to have to see them they have to get control of healthcare, and they have to get control of these rents, or they're literally going to create Potterville, and it's just going to be a disaster, and the politicians literally will be fearing for their lives. Okay, finally technology is rolling down. It's weak, staying weak, and what's interesting to me is it's given the weakness to the Russell 2000, but it hasn't broke down yet. I'll get to that in a second. Here's the VVIX. The VVIX kind of leads the VIX a little bit, so just kind of keep an eye on that. So I'm looking for some relenting here, and once we see that relent, then we know UVXY and VXX will release down. But this is one hell of a move. This is the volatility of volatility. That means things are getting more volatile in the volatility space, if that's not enough of a mouthful for you. But this is a good, 30% move higher, and these usually aren't sustainable either. So it's like adrenaline when you have volatility. It could get really spiky, but it can't last. And the reason being is that either people have liquidated their positions, obviating the need for protection, or they bought enough protection and now they're just taking profit, and then it just usually reverses back really hard. And here's SPY, and let me lift this area up a little bit here too. So this is the 100-day moving average. I'm pretty confident this will hold this time, and then we'll see how strong or weak the bounce is. I'm expecting a 10% correction in the market over the next 90 days. So, but I think we'll get a bounce first, and probably, we'll bounce up the VWAP here and then come back down, or we come down and we'll bounce the VWAP and come down and come through. And then we already broke the 50, hits the 100, and then the next level is the 200. So they're really grinding it down. So we'll have to just wait and see. I may have to put the 200 on my charts here once this breaks. Here's UVXY. This is just blowing through all the volume bands, and this is what they're talking about. 1, 2, 3. So I don't have Bollinger Bands on my chart, but apparently from this day forward it broke out of its Bollinger Bands, but it's way outside of everything. So this is being driven by either the algos that are running those pure trades, or there's some fear that something's going to happen over the Easter weekend. So my guess is I'd probably see it come back down, maybe hit here, come back up, and then break all the way down. But looking at the what 100-day is on this, you know, I've seen stranger things. I've seen them come up, come down, and come down. So just bear that in mind. But right now, if you're not in UVXY and you want to short it, I would just simply wait for this money flow to reverse back down. I think it'll probably follow through here because it's a lagging indicator, and the stochastics are still showing that it's trending. So, you know, right now the doctor's saying, hey, wait till 1950 to jump in, but you know that most of the profit will be taken out. I would, if it's up on Monday, I'd buy a little bit of some puts for the fourth week of April, and I'm gonna roll. If it's up on Monday, I'm gonna roll to the following Friday and then sell some puts against it for this week, and then typically these moves don't last longer than 2 weeks before you get relief. Even if it double tops or pushes up higher, you get a good sell off in UVXY before it pushes up again. So just FYI. Same with the VXX and dust. You know, I don't like to buy dust. Probably better off shorting Nugget if you wanted to, but it's definitely bottoming here. And then XLE, the counterpart to drip, it punched through its 100-day moving average. It fell right away from it on Thursday, and right through its VWAP too. So there might be some follow through on the downside here. Stochastics are weakening, and we'll see if the momentum pops or if it stays embedded in terms of basically stay short. We talked real estate. Just waiting for DBA to get on the correct side of that 100. Same with wheat and sugar. It's just having a hard time. And I just read an article that that cocoa and sugar kind of trades along with cocoa and coffee. Is that sugar? The cocoa looks like it's going to have just a huge glut for years to come for chocolate. And just 2 years ago, they thought there's going to be worldwide shortages. That's how much the experts don't know. They're calling for the climate change issue. So whatever the climate's doing now, whether it's warming or cooling or whatever, it is ideal conditions to grow cocoa around the tropics. And so that's probably ideal conditions for coffee and ideal conditions for sugar. So just bear that in mind. And I'm trapped in a coffee trade right now. I'm just trying to see if we get some movement on it, which is amazing to me that they had a 40% bud loss with the frost, and they're still able to keep the production up or the prices down. Now here's coffee. I'm in coffee at 1980. My stop is below 19, and if I don't get any positive motion on this thing in the next week, I'm just going to get out of the trade. And I'm waiting for the grains to push back over the 100. I'm confident that grain prices are going to move up next year. And so it was a record-setting year because of all the El Nino. And you can only store surplus wheat and corn for so long before it rots. And so I think we're going to be working off the surpluses here pretty quickly. MOS, we got stopped out. It hit the 100 and just rolled down. And now at this point, I'm just going to have to wait and see where it flushes. And before I hop back on again. I've been telling people that If you're a long-term trader, well, I would say trader, investor, and I was telling people this since February, is get 10% in SH, 10% in TLT, 10% in GLD, and sell 30% of your positions. And come summer, you'll thank me. And so it's starting to bear out, and I'm looking for SH just to keep grinding higher. There's just no catalyst for the market to move higher unless the Fed starts to massively add liquidity to the market and debt to the economy. We talked about dollars is kind of flattish, and UNG, it looks like a little head and shoulders pattern forming now. So shoulder, head, shoulder. We're looking 8 to 750, probably going to get down to 720, 730 area. It's moving out of its high season too into a low season, and so at this point, I'm looking to sell call spreads against UNG, and I'll put those out for those who subscribe to me as I do them. And I'm looking for natural gas to drift down probably to 7 before we get into the summer season. I called for 8, got really close, and now I'm looking for this thing to move back down to the bottom of the range. I don't think it's going to get down in the 6s again, but it definitely will get down closer to 7. And here's IWM. I have 132 puts on for next Friday. It's kind of my, just in case the world dissembles, over this weekend. I left the trade on. I'll close it on Monday if there's any kind of strength in the market. But it's just IWM has just been an incredible credit spread trade for me over the last 2 months. So it's just trading between 134 and 140. Dipped here a little bit into the 133 area, but I haven't been selling put spreads on it except for once, and I've just literally been selling call spreads on it every time it does these crazy spikes, and I did again this week. So now I'm looking to see if we get a flush, and then I'll be able to sell some put spreads against it. And usually those reversals are pretty strong, and so I can get a little bit closer to the strike and make higher than I normally make on a credit spread. But I'll point it out when I take the trade. Financials are just weak, and I just don't see how they get out of their own way. The Federal Reserve's giving them free money by paying them for their reserves that they have to keep above and beyond their statutory requirement, which the Fed gives them, and they keep raising interest rates but not changing the terms, so they get to pocket the difference, and that comes right out of our treasury and right into the bank's profit center. And I think the reason why she's raising these rates is not because the economy is great, is she's trying to get some cash into these banks, because nobody's borrowing really in too much in aggregate, and and nobody has any money to sit and deposit. So it looks like bad news all the way around for banks. So I'm expecting continued weakness. Talked about biotech, GDXJ. This is why it turned sour on the miners on Friday. Is that GDX was up and gold was up, and GDXJ got whacked. And so I think they portends further weakness for the miners and metals. So just keep an eye on it. If you're in it, I'd sure think about getting out here on the open on Monday, or at least 36.40 put as a stop. Okay, we talked about TWM. SCO, I think oil is topped. It looks like we have a momentum move here to on SCO to resolve itself. But that if this long-term stochastic trend pokes itself up over 20, I'll get in it again and see if I can get a 5 to 6% move on it here in the next month. And here's the interest rates. Keep falling, baby. I think by June we're going to see 2% 10-year. So if you're ready to refi, just get your ducks in order. And back to gold. So anyway, as Bob from Trade Genius, you guys have a great Easter weekend, and I'll probably pop back on after the market opens Sunday to see if there's anything of value I want to add. Thanks. Bye.